Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 20th of January, 2017, and the market finished mainly on a negative note this week. For the S&P 500, we lost 14 basis points. Russell was down a little bit worse, and the biotechs continue to be the big dogs in the overall picture. Let's see, banks also pulled back a little bit, as did the bonds. Let's take a look at the charts and make some sense of this action and try to figure out where we're headed next. So on the daily time frame, the S&P 500 is still quite constructive here. We've got a rising 50-day moving average. As long as we have that 50-day moving average rising, it tells us the longer term is still in an uptrend, and that uptrend is intact. When we switch down to a 30-minute time frame, you can see here I've got the volume weighted average price since the beginning of the year. So that means basically the year-to-date volume weighted average price. And we are, we're still closing above that. We closed just above that 5-day moving average. The 5-day moving average really means nothing right now, as we're just kind of going sideways. And until we can break the range that we've been in, which has been, basically 270, 227.50 to 227.25 to 227.75, and on the downside, support at 225 to 225.50. As long as we remain in that range, we're just consolidating here, and the range is tightening. That's good to see, because it means the energy is building within this range. When we take a look at, for instance, just a trend line here, we can see that we have lower highs, but we also have these higher lows in here, and it seems to me as though the energy is building for continued upside. And the reason I say that is because consolidations usually resolve themselves in the direction of the primary trend, which, of course, looking at the weekly and daily charts, the primary trend remains higher. The risk is that while we're in this range, we could break down below it. But until that happens, we still have the benefit of the doubt to the buyers. This week, we should have a lot more earnings reports that kind of set the tone for individual stocks. The NASDAQ continues to perform well. It did close higher here today, which means it made another new all-time high for the NASDAQ 100. So looking back to your monthly chart, we've never been in this area, and the path of least resistance continues to be higher. We did close above the week-to-date volume-weighted average price right here, and the 5-day moving average right in there. We're also above the volume-weighted average price year-to-date. I think that next week, what we're going to want to see hold early on would be 122.5. If that level breaks down, perhaps we drop down just under 122. But again, the bigger picture remains bullish, and there's no reason to think that this market is going to just turn around on a dime. The people who look for the top each time the market ticks down just a little bit experience what we know the semiconductor shorts experienced all summer and continue to experience, as this market closed once again at a new all-time high. So today we gapped up beyond this little band of resistance and held on to those gains. Heading into next week, the more important level that we're going to want to see this market continue to hold is 2 points lower, so still a pretty good distance away, at the rising 50-day moving average, which is also recent support. So it remains innocent until proven guilty. You should expect prices to go higher with stops below to protect yourself in case they reverse. The biotechs are still below that year-to-date volume-weighted average price. Now, they are up year-to-date when we take a look at the percentage, up 3%. However, in the broader picture, looking at the weekly time frame, we've still got a giant mess here. At best case scenario you can make on the weekly time frame is that we're undergoing accumulation, and we are still having trouble with the year-to-date, the volume-weighted average price from January of 2016. That's the purple line. We also have in here the 200-day or 40-week moving average, and drilling down to the daily time frame, we had seen the resistance up here at this trend line last week. It backed off of that and pulled back, and we're seeing that it continues to bleed off here. It is below the year-to-date volume-weighted average price, and that tells us the average price that participants have paid for the biotechs this year is right up here at about 278. Well, we're at 275, so the average participant this year is down despite the fact that it's higher, and that's the value of the volume-weighted average price. It can give you insights like that. By the way, a week from tomorrow, I will be doing a webinar with a friend of mine, JC, his group. He's putting together a day of technical analysis, and I'll be presenting about volume weighted average price since an event. So volume weighted average price on multiple time frames, and you can find details about that by following me on Twitter. Let's take a look at this action though. I mean, we're below a declining 5-day moving average. We're below the year-to-date volume weighted average price. There's no reason to be bullish on the biotechs on really any time frame. So I say continue to stay away from them. Perhaps they can heal in here next week if we can get back up above probably 280 and hold above there. Then things might get a little bit more interesting. But for now, no reason to be excited about that at all. The bonds, they have bounced a little bit. The declining 50-day moving average told us not to trust that rally. When we have a declining 50-day moving average, we expect that rallies will fail. And now we're coming back down into an area of prior resistance. This might become support, but when we look at an intraday time frame, we're below a declining 5-day moving average. We're also below the year-to-date volume-weighted average price. So bonds remain guilty till proven innocent. Maybe they can stabilize in here, but the overall primary trend remains lower. A couple stocks. Apple continues to move higher in here. I think an important level of support for this stock to hold over the next week would be probably near that 20-day moving average. That's the blue line and prior support in here. You can see how it found support at the rising 20-day moving average. So that remains innocent till proven guilty. The bigger picture is still looking like it has the potential to make it up towards that 123 to 125 level. That was prior support. That's when we added this stock to the Dow, etc. But currently, the path of least resistance remains higher. I'd say keep an eye on Yandex next week and YNDX. This one needs to get above 2211. That was today's high as well as the high back here. So for a swing trade, I think you could buy that stock above that level with a stop just underneath these little lows. I would also say keep an eye on this NVIDIA. NVIDIA, I have been making some comments on recently. First up in here saying that it looked like Qualcomm, that it had the ability price-wise to pull back. Nothing to do with the fundamentals of the company. It's pulled back 13% since then. The level that I was thinking it would be able to pull back to and then perhaps find support was the volume-weighted average price since this gap over here. And you can see that on Wednesday of this week, that's exactly where the buyers showed up in the stock. So for Alpha Trend subscribers, I was telling them that what we need to do now is to look at it. It is right here, we were bullish on it, and I said that this looks like the upside. Take some profits in here because it was daily R2 as well as the volume weighted average price from the peak. Now I think the stock is setting up for continued upside next week, so keep an eye on this one. If it can kind of rally back up, maybe even make another higher low and then rally with a stop under here, that's one potential scenario. This is a stock that we'll be talking about in Alpha Trends, and if you're not aware, I currently have a special for annual subscriptions. The daily analysis that you see, $199, so you can get it every single day, not just every Friday on YouTube. But a silver subscription gets you daily stock picks, a midday video, and a gold subscription, normally priced at $7.99 for $5.99, gets you a chat room as well. A couple other stocks to keep an eye on. I would say, the financials right now, the financials have pulled back. They're right on that 50-day moving average. The 50-day moving average often acts as support, but we don't buy there because it's not a guaranteed level of support. So what we see on an intermediate term time frame is that for the financials to be back on track, we've really got to get above probably 23.35 and hold above there. We still have a declining 5-day moving average, so we don't know if this stock is going to continue to just decline further, similar to the way that Citigroup, a leading stock in the financials, has continued lower. It didn't find any such support at the 50-day moving average. So for the people who thought that buying at the 50-day moving average was a good idea right here at about 57.75, what we want to do is look at a shorter term time frame and say, was there any actual evidence that the buyers were gaining control in that area? And the answer is absolutely not. They still are not gaining any control. And we look at this as guilty till proven innocent on the intermediate term, as long as we remain below that declining 5-day moving average. One stock, we look for swing trades each week, each day. And this week we had gotten involved in Best Buy. We were looking to swing trade this stock, and we bought it right here. A great purchase. We sold a third of the position up here, and then that day we raised the stop on the balance to this level. We did not expect to get stopped out, but we did get stopped out with a pretty decent little gain for a day trade. Again, the intention was a swing trade, but the market stopped us out because it was failing. One of the main things that it had done was to make a lower low below that volume weighted average price for the day, and that said let's move to the sidelines and reassess. If you had bought here and did not have good risk management and are still holding it, well, instead of getting out with a profit, 3 days later you'd still be holding a stock and it's in a intermediate term downtrend. You would be down. So that's what we do each and every day, is talk about risk management and look for low risk, high probability trades, maybe like PayPal next week. PayPal's been consolidating in a tight range here, and it's got a big short position in it. If you look at this daily chart, you've got 30 million shares short. It can't feel good, obviously, to be short, and perhaps getting back above these highs right here next week with a stop under 41. The PayPal could be a good idea. Anyway, thanks for tuning in. I hope you had a good week, and I'll talk to you next week.